Hello, and welcome to the fifth installment of 2-Minute Tuesdays. Today's installment is all about using key subscription metrics to measure your business. One of the strategies that Salesforce.com employed to get to $1 billion was to use metrics specific to a recurring revenue business. Today, we'll focus on 4 key metrics: total contract value or TCV, annual contract value or ACV, monthly recurring revenue or MRR, and committed monthly recurring revenue or CMRR. Let's start with TCV. In a subscription business, there is often a contract term or length to a subscription. For example, if a customer agrees to a 2-year contract for $500 per month, the total contract value would be $12,000. ACV, or annual contract value, is the amount of goods or services a customer agrees to purchase in the coming year. In this case, the ACV is simply half the TCV, or $6,000. Monthly recurring revenue is the amount of recurring revenue a company receives in a given month. It ignores both one-time fees and usage or overage charges, normalized to a monthly basis. This is important as overage and usage charges are hard to forecast, where MRR gives a baseline of predictable current revenue. A more meaningful metric is contracted monthly recurring revenue, or CMRR. This metric is the company's forward-looking MRR, taking into account future upgrades, downgrades, cancellations, and renewals. Let's use an example of a fictitious SaaS company to illustrate these metrics. CloudStore has 2 customers, A and B, each with its own subscription. Using Zuora, CloudStore can easily manage their subscriptions and payments, as well as calculate and track their metrics. If we look at TCV, CloudStore has 1,820 of total contract value, and it appears that customer A is more valuable than customer B. If we look at ACV, we see that CloudStore has a total ACV of $1,340, and customer B has a greater value than customer A. While TCV and ACV are good metrics for understanding subscription orders, MRR gives greater transparency to a company's current revenue stream, and CMR gives greater transparency to a company's future revenue streams. This allows for better decisions to manage working capital and forecast revenue. CloudStore knows that it's earning $100 in MRR today, and it can expect to earn $84 going forward. Just like CloudStore, you can use Zuora, which is built from the ground up to manage subscriptions, to measure and track your subscription business.